Remember, inflation is not just an expansion of the money supply, but also the supply of credit, because consumers could buy using credit just as if they had actual cash. And that's what's been going on. Even though the Fed has raised interest rates, people keep on borrowing and spending. Household debt at record highs, credit card debt at record highs, government debt, deficits running at a record pace. So the Fed has really had no effect on slowing down credit growth, and all of this is fueling inflation. But the box that the Fed is now in is if raising interest rates is their tool for fighting inflation, apart from the fact that interest rates are also a cost that businesses have to pass on to their customers, just like rents or raw materials or labor or any other cost. The problem for the government is as interest rates go up, budget deficits automatically go up because it costs the U.S. government a lot more money to refinance all the maturing debt, plus to finance all the new debt. And to the extent that that increase in interest rates dampens the economy, it also leads to a reduction in tax revenue, an increase in other government spending. And so the Fed ends up driving the budget deficits even higher. And that ultimately is the source of inflation, because it's the Federal Reserve that ends up monetizing all that government debt. That is, what's driving the problem. And I think ultimately, as our budget deficits are exploding, it's going to cause a big loss of confidence in the dollar and U.S. Treasuries. And so as the dollar starts to fall, that puts even more upward pressure on consumer prices because the dollar now has less value internationally. And so, everything that you buy is going to be more expensive. Is it impossible, though, that there was enough inflation, I think, in the pipeline before money supply started to contract, although the entire time credit continued to grow, which is obviously part of the real money supply, is what people can use with credit. But what if there was a big backlog of inflation that hasn't even fully worked its way into the price structure yet? So I don't know that we've even caught up to the inflation that was created before we saw the contraction in money supply. Again, if credit continued to expand the entire time, I don't see how the upward pressure on prices is going to abate. We have a lot more debt than we had when Lehman failed. I mean, debt has exploded, and we didn't get all that QE for free. I think we did create inflation. A lot of it went into financial assets temporarily. I think there has been a big lag, and I also don't think the government measures inflation properly, so it's hard to tell exactly the effects that inflation has had on prices when your CPI is flawed by design and doesn't really capture the degree to which prices are rising. But I also disagree that Japan doesn't have an inflation problem. They do. Even by their own measures, it's running 2-3%. But again, I'm sure that there's a lot of flaws in the way the Japanese measure it. But again, you have to look at what might have happened, because you can't just look at prices going up. Maybe prices should have gone down. Maybe without the government creation of inflation, consumers would have benefited from lower prices. And they didn't get lower prices. They were robbed of those price declines by the government that created inflation. And so maybe instead of buying things for 2 or 3% less, they ended up spending 2 or 3% more. But that's 5 or 6% inflation, not 2%. The governments want the public to believe that inflation is created by outside factors, by greedy corporations, by economic growth, by employment, by all sorts of things. What is being inflated is the money supply. Even in the 70s, you get a dictionary, Webster's dictionary, look up inflation, and it says an expansion of the money supply. And it's also money and credit. Rising prices are a result, a consequence of inflation. They are not inflation, and they do not cause inflation. They are a byproduct of inflation. The most recent announcement by the Fed that they're tapering their quantitative tightening program. They're going down from $95 billion a month to $60 billion. This is the first step in a return to quantitative easing, because the Fed is going to have to choose between government defaulting on its obligations or slashing spending on Social Security, Medicare, government pensions, or monetizing that debt, because there is no way that the government can finance it at current interest rates. The only way they can get interest rates down really is to go back to QE. They're going to have to start buying more government bonds to artificially suppress rates. And so inflation is going to explode. I mean, those are the choices. We can have default and deflation, or we can print and have massive inflation. But from a political perspective, I think that's the only viable choice that the Fed is going to make. And even if Powell didn't want to make it, he's going to be under tremendous pressure to make it by the Biden administration or whatever administration, even the Trump administration would do that. Nobody wants to see, government spending cut dramatically. Nobody wants the U.S. to have to honestly default on its debt. If they raise taxes on the rich who are already paying a tremendous amount of taxes, I don't know how much additional revenue they're likely to get. In fact, they may even lose revenue depending on how they do it. What we need is consumption-based taxes, like a national sales tax or a higher payroll tax. But no one's going to vote for that. I mean, no one's going to tax the middle class. And the middle class is already broke. People have no savings. They're maxed out on credit card debt. And they're working 2 or 3 jobs. How are you going to tell middle class voters that on top of all this pain, we're going to significantly raise your taxes? I mean, it's just politically, it's a non-starter. So the path of least resistance is to print, right? And then they're going to blame the inflation on somebody else, right? Speculators, greedy businessmen, Putin, OPEC. I mean, they always point fingers because they've redefined inflation as rising prices. And so the government doesn't raise prices. They point to all the people who are raising prices and they blame them for the inflation. We would have to have a tremendous increase in economic growth to bail us out of this problem. Of course, if we didn't have the problem, then the economic growth would be a much bigger windfall, right, for Americans. But is it possible that we can grow the economy so much that we can actually afford these massive deficits? I mean, maybe, but is it likely? Is it even a realistic possibility? I don't think so. And the debt at this point is just growing exponentially. That is the problem. And much higher interest rates are necessary than the rates we have right now. I believe we're in a recession. I just don't believe a lot of the numbers that we get from the government. I know that the Great Recession of 2008, it began in December of 07, but they didn't officially acknowledge it until December of 08. And they went back and they revised an entire year's worth of data to show that we had been in a recession for the entire year. And even up until mid-2008, most economists and Wall Street strategists didn't see a recession coming, even though we were in the middle of the Great Recession. So I think something similar could be going on. And I also think that the weakness in the economy, this stealth recession, is the reason that Biden and Harris are so unpopular. And if you look at these polls, where they score lowest is on the economy. And so how could they be blamed for a lousy economy if the economy is great? Which is what the politicians are telling us, and Wall Street and the bankers. But the public is telling us that it's not good. Because if it was good, they would be crediting Biden. But they're not. They're blaming him because it's lousy. So I think we have recession. I think we have inflation, which means we're already in stagflation. I just think we have a lot of stag and a lot of inflation, despite the fact that Powell claims to see no evidence of either. They may get some tax increases that will mainly fall on higher income people, but those taxes will mainly diminish investment rather than consumption. So if you just raise taxes and the result is that wealthy people invest less in productivity enhancing capital, because they're not going to reduce their consumption. If you raise taxes on the millionaires and billionaires, they're not going to stop spending money on entertainment and food and travel. They're going to invest less. And that's not how you fight inflation, by diminishing investment capital. You have to go after consumption, and none of the politicians are going to do that. But what's the most problematic, and you'd have to agree, is that if you're right, and I'm right, we do have a recession coming, whether it's a slowdown or an actual recession. We know how the government is going to respond. The minute we're officially in a recession, we're going to get stimulus. Regardless of where the inflation rate is, there's going to be some type of program to stimulate the economy. Government is going to increase spending even more with stimulus checks or some type of programs. The Fed's going to want to cut rates and do something, because now we're in recession and unemployment is going up. But all this is happening with record budget deficits even before we juice them. And automatically, when you're in a recession, automatically the deficits get bigger because you have less tax revenue, you have more expenditures that automatically kick in, and you got this massive deficit's already there. So we've never gone into a recession in anywhere near the vulnerable fiscal position that we're in right now. The main reason that I think a lot of European nations are lagging is not because they have a VAT, it's because they also have an income tax and they also have a big social welfare system and a lot of regulations. Now, yeah, I would prefer a sales tax to a VAT because it's more transparent, but that's why governments like VATs, because it's not as obvious how high the cost is. But I would much rather run an economy on a consumption tax than a tax on work and production and income. That's not the way to do it. And it's a much fairer, easier tax system to comply with. You don't have to keep books and records. You don't have to, have all these loopholes and various ways to try to get around the tax. That's the type of tax system that the founding fathers envisioned. That's why they made the requirement to apportion direct taxes. The U.S. government was supposed to run on excise taxes, not direct taxes. But my point was that if we raise taxes and just do it on incomes, it's going to be counterproductive economically. I would rather not raise taxes at all. I would rather slash government spending. I think that regardless of what the Fed does, they should be hiking rates. They're more likely to reduce them somewhat. But I think regardless, long-term interest rates are going higher. Bond yields will move up because I do believe the dollar is going to roll over. And I think the selling pressure on treasuries is going to continue to mount. Not only from the government trust funds, which are now big sellers like Social Security, they have to sell treasuries because they don't collect enough taxes to cover the cost. But I think you're going to see a bigger exodus of central banks, particularly in the emerging markets, the BRIC nations. I think they're going to accelerate their gold buying. In fact, as the price of gold moves higher and higher, they're going to have to spend more dollars to buy that gold. They have a lot of dollars on their books to get rid of and to replace with gold. So I think you're going to continue to see gold prices rise. At some point, investors are going to start buying gold too, competing with these central banks. So I think the trajectory of the increase is going to accelerate. And that's, the canary in the coal mine for the dollar. I think, gold is the main competitor to the dollar as a reserve asset. And as gold prices really start to rise, you're basically seeing the gold value of your dollar reserves plunge. That's going to put more pressure to de-dollarize. It's already there based on the sanctions too that we put on Russia. You have a political motivation, not just an economic motivation to reduce your reliance and dependence on the U.S. dollar. So I think the dollar is going down. I think bond yields are rising. I think the price of gold is going up. And this is also going to be very problematic for the U.S. economy because higher interest rates and higher inflation are going to be a big problem that are going to exacerbate the severity of the next recession, which of course the Fed is going to try to fight by going back to its monetary playbook of creating more inflation. Because you have to understand, the way the Fed fights recession is by creating inflation. That's what it does. It creates inflation. But when you have an inflationary recession, when inflation is the cause of the recession, how are you going to fix that, with more inflation? It's not going to work. It's going to backfire.